Hi, welcome to the Market Alert for Wednesday, the 9th of August 2023. So markets teasing with big levels to hold or not to hold is certainly a question that's being asked. US stocks finished lower, albeit off worse levels amid global headwinds and banking sector pressure. I don't know what the headwinds are. Let's have a look. US stocks were negative but finished off the lows after nursing the early selling pressure stemming from global peers, while the focus in Asia turns to Chinese inflation data. Well, that came out of nowhere, didn't it? Stocks and yields slide while dollar rises on a slew of global risk-off catalyst US market wrap. Wow, dismal Chinese data. Harker nods to more hikes and 2024 cuts. Moody downgrades US regional banks. No surprise there, as they're hemorrhaging money like it's gone out of fashion. Italy announces windfall on tax, and major Chinese developer missed payments on dollar bonds. Strong US 3-year auction, US trade deficit narrows, UPS cuts revenue guidance, and strong LLY earnings. I think that's Eli Lilly, isn't it? Earnings and lifts outlook. Interesting set of news there. Still, let's have a look at the more important things, the market action, and we'll kick off with the Dow. So in the Dow, we could see that yesterday we sold off and then we came back with the market closing above the 5 and the 20 bar moving average in an area where it currently is. Will it move back to the upside today? The day before we've got the CPI. There's no economic news today, by the way, but there is tomorrow. We've got that CPI number from the US, or CPI. So this is the potential upside target should the market move up from here. Interesting that they retested Friday's low. Where are we? What day is it? It's Wednesday, isn't it? Monday's lows. Retested Monday's lows there. And yesterday you can see that we were sideways and then we started to drift lower. And then when the US opened, it had a damn good shakeout before then moving to the upside non-stop all the way. Now above the DP levels there and ready to make an attack or an assault on the high of yesterday. And if not, and we break the DP, then we're heading down in this direction towards yesterday's low. Meanwhile, in the German DAX, still some weakness around, as you can see yesterday, but coming off the lows too. These are the upside targets for this market. It needs to get back above the 5 MA. As far as the daily is concerned, in the 30 minutes, we were very choppy to begin with, and then we made a beeline for the downside, went down to the S3. We know the market will stop in this area, then it reversed and has been moving higher ever since. Currently above the close and the DP, it's got the 200 MA in the way on the upside, but as you can see, we're sort of equidistant from the high and the low, so depending whether they shake out to the downside first down towards the close and then try and bring it back. No doubts they're going to do whatever they can to get the market up to the highs, because that way it will allow them to have a bit of leeway tomorrow, just in case the CPI numbers have increased again. There'll certainly be some volatility around if they have, but that depends, of course, half an hour later after they release it, whether they actually downgrade it or amend it accordingly, because that seems to be the theme these days. Oh, it isn't as bad as we thought it was. So let's have a look at the S&P. You can see they're also down at 62, coming off the lows too, and trying to move back up on the overnight. Again, same picture, we moved down and then found support at the S2 in the S&P, and then exactly the same picture at the moment as the Dow, except we're a bit further away from the low of yesterday. Meanwhile, in the FT100, again stuck in this sideways range, incredible resistance here. That ascending triangle remaining intact at the moment. Will it break to the upside or the downside? The majority break to the upside, but we'll just have to wait and see. Of course, time will tell. A bit of movement to the upside yesterday, but then we sold off down just through the low, and then the market came back and overnight strong with the electronic market. US dollar continued to move higher yesterday. It's had an impact on the metals once again, but we're in a sideways range there, obviously waiting for news of the CPI numbers, and of course Harker was speaking yesterday, as he said, talking about further hikes to come. So tempering the metals market there with that. Let's have a look at the metals. So once again, silver absolutely crushed. It isn't finished yet. We're going down to these lows and possibly, whoops, let me just move that over, and possibly lower as well. Depends on the inflation numbers tomorrow, of course, but the lower they can take this, the happier the manipulators will be with having the massive short position keeping the lid on this market that is still trading at 60% less than its all-time highs. The only market in the world that has not gone back to its all-time highs during the inflationary period. So if that isn't manipulation, I don't know what is. And there you can see the fall off yesterday, and overnight we're back above the DP. But watch that low. They'll hammer that when they get the London fix at lunchtime. Same for gold, but not so much, sitting at that 200 MA and trying to hold, whereas silver has gone through that 200 MA now, and there's no chance of it coming back anytime soon. 30-minute of gold. You can see there we were down, but holding quite nicely and a lot further above the DP than the silver market. Which means, if I just drag the chart over, we continue to move up and we're going towards these highs here, which is 86 on the gold-silver ratio. It won't take long to do that. Like I say, they're going to continue to hammer the price of silver to the downside in the short term, for sure. Okay, that's it for this one. Let's see what the market does the day before the release of the CPI numbers and whether they can move the market to the upside, create a bit of a buffer just in case they need it for tomorrow. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.